Welcome to Muffet Investments. This is our weekly market analysis video, and this week we will combine this with an in-depth analysis of Uber stock. We are quite bullish on Uber stock and we would like to present the investment potential of this stock to our audience. As always, we do this analysis in good faith and we want our viewers to benefit from our analysis. But we are not financial advisors and these are our own personal views and not investment advice. We are starting our analysis on DXY. DXY has rallied 2.1% this week as escalating geopolitical tensions in the Middle East drove money flows into the dollar. Also, if you look at the weekly chart on the DXY, we were in a broad range and price was in the bottom of the range and all it needed was a catalyst to drive price higher. The price rebounded strongly from the monthly FVG and has broken the weekly market structure and has closed above the weekly FVG. So currently the weekly structure is bullish. Any move below will be supported by the weekly FVG and 101.37. If we look at the daily chart, the price moved up 5 straight days without much of a retracement. From an algorithmic perspective, the accumulation of the dollar positions by the smart money has already happened at the bottom of the range and price has now shot upwards. Price can potentially retrace to the box next week. If this analysis is right, then price should not go below this zone. If price were to go below the zone, then we are wrong and we have to accept that the market is always right and move to the sidelines or trade in the opposite direction. What are our bullish targets? The first objective is the high of the last week at 102.39 and 103.18. We are going to look at CPUST next as the chart is interesting. We have been in a strong uptrend, but price has wilted since the DXY started the uptrend. The price has closed below the 50-day EMA. If we look at the daily chart, we have our focus on 103.10. This could be the next potential target. Above current price, we have an imbalance zone, where price can retrace to the early of the week. We can frame shorts in the zone on the lower time frame with defined stops aiming for the target. If price goes above the zone, then the price will no longer be bearish. Now let's look at the indices. One of the important correlations to remember is the fact that the DXY will have an inverse relationship to the indices. Muffet logic, the indices can be wrong but the DXY cannot be. So if we see continued strength in the dollar in the next few weeks, then it will be very hard for the indices to go higher. So it is important to watch DXY and the evolving geopolitical situation. We do not think that this is the time to go aggressive on the stocks. If the indices continue to rally and we miss a rally, we are okay with it. The risks of being aggressive is much higher than the rewards. So we encourage our viewers to be cautious and even raise money by reducing holdings if the DXY continues to rally. Nasdaq. The Nasdaq had been relatively weak compared to the Dow Jones and S&P 500. The price is at the resistance of the weekly FVG. The price is slowly digging into the FVG. If price closes above the FVG, then price becomes bullish. If we don't take into account the action in DXY, then the price is bullish. Our bullish targets will be last week's high and the high 2 weeks back, which is above the weekly FVG. Very short-term long trades can be made on the lower time frames targeting the highs. To keep things simple, if price closes above the weekly FVG this week, then price becomes very bullish. If price closes below the weekly FVG, then price becomes bearish. S&P 500, this is the daily chart of the index. The price is above the 20-day EMA and is bullish. So a long bias should be had. However, the same correlation applies with DXY. So watch the DXY for a heads up. Gold, the gold is in a strong uptrend. This is the 4-hour chart. The price has been in consolidation. The price has resisted a move down in spite of rise in DXY. For next week, if price retraces to the shaded area, then we will be interested in longs on gold. Silver, although silver has been lagging behind gold. But more recently it has shown relative strength and has broken out. On the candlestick chart, the price looks to be near the top of the range. But if you look at the line chart, the price has broken out. So longs on retracement is advised. Crude oil, finally the crude oil. The price has rallied because of escalation of geopolitical tensions in Middle East. Even though supply has not been disrupted, there is widespread fear that Israel might bomb Iranian oil facilities. If this happens, then crude oil prices can shoot up above $100. For this reason, we think that they won't do this before the US election, as Israel will be under heavy pressure from Biden administration to delay the attack until after the election. Even so, we think that price can rise as traders will bet on this scenario and pump the prices up. The next objective is around $77. If we look at the 4-hour chart, we can see that the support is on the shaded zone around $72. Longs can be taken if prices retraces here on lower timeframes. Portfolio managers should have oil majors like Exxon or Chevron on their portfolio, as they will benefit most from the rise in crude oil. Uber really caught our attention on the charts recently, and after digging into their financials, we became even more convinced about its growth trajectory. So, we're going to share why we think Uber's stock could be on the path to some serious gains. Uber was started in 2009 and they did their IPO in 2019. Between 2009 and 2016, they achieved rapid growth and were able to attract investments from the Saudi Arabia Wealth Fund. They also attracted funding from SoftBank, which bought 15% of the stock. Uber launched its food delivery business in 2015. They also acquired another food delivery business called Postmate. They have since expanded into grocery delivery business, Lime Scooter Hire, and Uber Health. They have also partnered with Waymo to offer autonomous self-driving to the customers. They have equity stakes in multiple other companies and their prospects for growth look good. Uber is currently trading at $74.29 with a market cap of $159 billion and a PE ratio of 80. Uber reported second quarter earnings on the 6th of August and reported that the gross bookings were up 19% year-on-year with operating cash flow of $1.8 billion and free cash flow of $1.7 billion. The CEO Dara Khosrowshahi commented that the company delivered sixth consecutive quarter growth of 20% alongside record profitability. When we compare the Uber stock with the S&P 500, we can see that the stock has started to outperform the broader index since 2024. When we compare Uber with some of their rivals like Lyft and DoorDash, we can see clear outperformance, and this suggests that the market believes in that Uber is the better bet. Let's look at the second quarter earnings in detail. The monthly active platform customers (MAPC) increased to 156 million and up 14% year-on-year. The monthly trips increased 6% and the yearly trips increased 21% year-on-year. The gross bookings increased 21% and the revenue increased 17% to $10.7 billion. The adjusted EBITDA grew by an impressive 71% to $1.5 billion. Mobility business. The gross bookings were up 27% year-on-year and the revenue from this segment increased 29% to $6.1 billion, and the adjusted EBITDA was up 76% at $1.56 billion. Let's hear what the CEO had to say about the mobility business.
Well, our trip growth was super strong, right? We grew trips 24% on a year-on-year basis on a base of 2.6 billion trips. So, as you get larger, it gets tougher to have that kind of growth. But if you look at our gross bookings guidance going forward, it's between 18 and 23%. So we do expect to continue to grow at very, very strong rates, while at the same time continuing to increase profitability and margins, which is the best of both worlds, which is what investors expect of us. And frankly, it's what we know Uber can deliver.
Delivery business. Gross bookings were up 17% year-on-year and the revenue increased 18% to $3.2 billion and adjusted EBITDA grew 3.2% to $588 million. They are adding to this the grocery business, which is bigger than food delivery business in terms of size, and this segment is growing at about 40% per year.
And it is about getting the basics right. The first thing is customers want choice. We now have almost 1 million restaurants on our site on a global basis, up about 10%, but they also want reliability. So when we measure the number of orders that we get wrong, the number of orders we get wrong are down 25% on a year-on-year basis. So
Uber abroad. Latin America and Asia Pacific are standout growth drivers. In Latin America, there is growth in two-wheeler trips called Ubermoto, which is quite popular here and is lower cost and much more affordable. In Asia, there has been tremendous growth in India, especially the three-wheelers segment. They think that the India market can grow for another 5 to 10 years. Freight business. This has not been doing well following the pandemic, but Uber is starting to see a stabilization of the business. The spot rates are improving, which is an early signal that the business is improving. Uber for business. Corporate ridership is on the rise, and Uber has a platform called Uber for Business where companies can utilize Uber for travel for employees, and Uber is seeing increased spending by the companies on this. According to Uber, this is a high-margin business and is again growing well. Uber One and innovation. Uber One is a subscription business with free delivery on Uber Eats and discounts on Uber rides. About 50% of the food delivery business is coming from Uber One customers. There is also a discounted membership for students. They had $6.3 billion in cash and cash equivalents, and they had equity investments in multiple other companies including Didi, Aurora, Lime, Grab, Delivery, and Joby. These stakes amount to a further $6.2 billion. They have about $10 billion in debt. The guidance from Uber for the next 3 years is mid to high-teen compound annual growth rate for bookings and adjusted EBITDA growth at a compound annual growth rate of 30% and free cash flow as percentage of adjusted EBITDA of 90%. Uber has not confined itself to just mobility and delivery business. They have innovated and they have diversified into Uber Reserve, grocery and retail, advertising and enterprise solutions. This gives them multiple avenues of growth. So we have a stock which is poised for growth for the next 3 years. The stock is also showing relative strength compared to the broader index. We think that it will continue to outperform.
But I would say that we've consistently proven that we can grow faster than the category. So I think that's something to take into account. We're the largest player. We've got the best technical capabilities. So I think we will do better than the overall marketplace.
That's it from Muffet Investment this week.